Boom! What's going on, guys? Energy News Beat, episode number 177 here on this gorgeous Monday, December 14th, 2020. I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, as always, joined by the executive producer of the show, the purveyor of the show, and the director of publishing of the world's greatest website, oilandgas360.com. Stuart Turley, how you doing today? You have a good weekend?
Oh, it's a beautiful day in the neighborhood, and this is like Groundhog Day.
No kidding, guys. You can check out what we've got on the show today and a bag of chips via the rundown in the middle. But first, guys, just subscribe to this YouTube channel, oilandgas360.com/intercom. The best way to stay up to date on all your finance news. Hit that pesky notifications button so you never miss an episode. We are back on normal schedule. Everyone's due a little off week. We actually had to make some cash last week, so we sort of jerry picked some shows around, but we will be back on our normal grind this week, covering everything in the oil and gas markets. Starting in the equities markets, because we got to cover top line indices pretty much. SPY flat, NASDAQ actually up 1 full percentage point, Dow Jones down 0.5% or about 1/10 of a percentage point. Couple things to watch out for. On the bear side, New York, LA, Denver now, basically Chicago, all in, banning indoor dining, basically going into lockdown. New York Mayor Bill de Blasio warned. I love how he's just warning the city. We could experience a full lockdown. It's like we won't dive into it. That quote just infuriates me. The point is, as lockdowns go, so will sort of that bearish sentiment. On the other side, vaccines get shipped today, and it looks like a $908 billion bipartisan bill that's going to be split into $748 billion with money for jobless and small businesses. There's this other part that's going to be a little more controversial, liability protection, some state aid. This is all via a Reuters report. Point is, we've got two really just tense operations, or bull and bear, pulling each other back and forth. It'd be very interesting to see where the market goes. I'm not trading it. Trade at your own risk. If you've been trading crude oil and been on the long side, holy smokes, and Johnny Manziel, you made some money. It's been unbelievable. 46.97. That's up a full percentage point today, flirting with $47 or $47. This is off the back of some slightly bullish news. And on Wednesday, we're about to release an interview with Chief Economist Dean Foreman over at the API, really pushing the sentiment that a lot of the really bearish looks on crude oil were a little overblown, and the fact that when you look at the raw data, some of the fundamentals actually look better. So that would be a very interesting conversation that will roll back into the curve, up 0.8 of a percentage point, 46.73. Natural gas up $2 or up 3.4 percentage points to $2.67. Looks like it's going to be a little colder of a December. Thank goodness that finally get that number back up. Stu's got 320. We're still reminding you guys, everybody was calling 420 gas. So I'm just letting everybody know, current price $2.67. Back into the curve, only up 1.2 percentage points, $2.84. XOP was down 3.7 percentage points. That's funny. Crude oil up a percentage point, down those equities today. They're down to 60.15, sort of kind of what I would just call a pullback from an insane bull. I don't know if there's really anything on the any one piece of news that means that, other than the fact that it's just been an outstanding month for energy. We're due to pull back a little bit. OIH doesn't fare as bad, but still down 2.9 percentage points, 159.22. Let's go and look at a couple equities on the downside. Texaco Gas, 10 percentage points. SM down 10.5 percentage points. Laredo down 10 percentage points. NextDecade Corporation down 15 percentage points. On the upside, good numbers. Permarock Royalty Trust, they're up 6 percentage points. Consol Coal, they're up 6 percentage points. Midcon Energy Partners up 10 percentage points. And Sandridge up 12 percentage points. Guys, before we dive into the international news desk, I need to tell you that the show is powered by Data Gumbo. Guys, these are an international technology company with customers all around the world who build, automate, and automate their own smart contracts. Data Gumbo's smart contracts offer a new approach to commercial relationships, one that reduces friction to streamline operations, deliver increased transactional certainty, and increase cost savings. Every transaction is accurate, certain, touchless, automated power via the Gumbo Net. Go get yourself a big helping of Data Gumbo via their website, www.datagumbo.com. Stu, what's internationally? What do you got for us?
Hey, a couple things, Michael. I just want to give you a follow-up on Data Gumbo. They actually released a press release this morning on growth internationally and everything else. So that's on Oil and Gas 360. I got a new one here for you. We had a ship get hit by a explosion hit a Singapore flagged oil product tanker in the Saudi Arabian port of Jeddah, causing hull damage but no crews. Thank goodness the tankers have two hulls. So it really did not get through the second one. A little bit of oil came through. We'll keep you posted on that one. Hey, got another one here with Reuters kicking this one out about OPEC. OPEC is coming out with new numbers, and they're saying demand will rise by 5.9 million barrels per day next year for total world supply of 95.89 million barrels per day. The growth forecast is less than 350 barrels per day than a month ago. So basically, OPEC is really trying to hone in on a needle in a haystack, trying to figure out what next year is going to be. I think they ought to just quit
while they're ahead. Yeah. Well, that's a great rundown. Doing a really good job of keeping us up to date. And OPEC going into 2021 is going to be spicy, so you're going to have your hands full. On the U.S. side, couple things. First, we had a little M&A action. As I mentioned, SandRidge was up 12.8 percentage points, biggest mover of the day. They actually announced the sale of their North Peak assets for $47 million. The buyer is Gondola Resources, which is an affiliate and backed by Fulcrum Energy Capital. They're actually out of Denver. Street obviously really liked with SandRidge dealing with some liquidity issues. They raised equity, about $400 million in equity last week, and then all of a sudden used it to repay some debt. So this brings them some liquidity in the short term to be able to move some stuff for Gondola Resources. This is only 10% of SandRidge production. So if you Gondola Resources, you're really stripping off some of the edges. I mean, these are the type of deals I like just because there's a reason, Gondola can probably come in and for a low cost be able to really find a little more value than SandRidge could out of that. It's generally how these deals work, grabbing some friend acreage. We need to dive into a little more of where some of that continuous acreage is. But generally, I'm a fan of these smaller size deals, chipping off some of the edge because there's probably some incremental value to be found there. The only other thing we have today is ExxonMobil. As Stu's been covering on the international news desk, super majors and some of these international super majors specifically have really swung hard into the renewables. BP, Shell, Equinor, all really swinging. Total, all over into the renewables. There's two companies, Chevron and Exxon, have not really released anything. As we covered last week, Engine Number One and D.E. Shaw last week fired an activist campaign against Exxon, saying they need to do a little more in the renewables. Well, today, guys, ExxonMobil announced several new emissions targets and said it would begin publishing pollution-related customer use cases of its product for the first time. Again, this is days after the activist investors go. To give you an idea of exactly what they're going to be some of the numbers that they went ahead and released. Upstream emissions intensity dropped 15% to drop 15 to 20% by 2025 compared to 2016 levels. Methane intensity to decline 40 to 50%. Flaring intensity to fall 30 to 45 percentage points. Routine flaring will be eliminated by 2030. I'm a fan of that right there. We should not be flaring and wasting an incredible resource that we have. Whole nother podcast we could do. Exxon also plans to provide Scope 3 emissions each year. And it's a big step, Stu. I know you have some thoughts on this, so I want to bring you in. Exxon's going in. They're doing it.
I think it's fantastic, Michael. You nailed it right on the nose. Routine flaring will be eliminated by 2030. I think that it should be eliminated before 2030. I think everybody that's standing up there waiting for a six-pack abs like you and I is too late. They need to be reducing flaring to almost nothing next week. Personal opinion.
Yeah. And that was one of the big issues in the Texas Railroad Commission election that just happened. There was a guy in there, Matthew Serra, who, unfortunately, I don't think he had much of a chance considering he was running as a libertarian / independent, but he was the one fighting for flaring and actually brought it up and made a lot of these people address it. So, there's a lot of other stuff going on with this, but we'll be following this very closely. Really, all that's left is Chevron. They're kind of the last straggler in here. But interesting to see what happens. Stu, do we miss anything today?
I don't think so, Michael. Let's go get back to work.
Let's do that, guys, and we'll let you guys get back to work. Thank you for checking us out. World's greatest website, www.oilandgas360.com. For Stuart Turley, I'm Michael Tanner. We will see you guys tomorrow covering the Energy Beat.